Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Anish Sheth. Anish, thank you for joining us.
Thanks, Hall. Happy to be here.
Great. So what was your background before going into the CPG space?
Well, I started my career as a finance lawyer in Washington, D.C. and New York. From there, I moved to the business side, worked at a few banks in New York and Hong Kong. So after a few years doing that, though, I had kind of the itch to start my own business, and I started World Peas, which is a healthy snack food company that was based here in Austin.
That sounds great. And so why did you get into World Peas and what got you excited about that?
So I always had a passion for food and travel. And like I said, I wanted to start something on my own. So I'd done some research about food companies, thought Austin would be a good place to start it. And did a lot of research, met a lot of people, and started initially with a seasoning company, but then met some co-packers and manufacturers that were making snack foods, but hadn't really moved into the healthy side of the business or the better for you side of snacks. So collaborated with the co-packer on creating a little specialty product that fit in the salty snacks space, but was a healthy alternative to a lot of the things that were out there.
So what would you tell a prospective investor who wants to pursue a CPG investment? What should they be looking for before they dive in?
So I think it's really important to get, and I'm sure you hear this from a lot of people, but really get to know the founders and the founders' appetite for risk. Every startup struggles, even the ones that are growing at 1,000%, that are making every chart, every kind of list, fast growing, they struggle. It's a cash-intense business in the CPG world, especially the food and beverage side. You need to find founders that have the appetite and the stomach for the types of struggles that you have in terms of like cash and finance with respect to the company. I experienced that firsthand with my company as we struggled to raise money, as we learned how much the trade spend really was for a lot of the retailers. And so I think that really opened my eyes to what's important in investing in this space. I love investing in things that I can touch and feel and share with friends, and CPG is great to do that. But I think with really small startup companies in this space, you really need to make sure that founders can live through the ups and downs of a company like this.
Well, the CPG space is evolving very rapidly, and how do you see it growing from here? Where do you think it's going?
You're right. Well, it's constantly evolving. In the last few years, we've just seen it really change with the introduction of so many smaller brands really competing with the big food companies. So from a sales perspective, I think there's an acceleration in the online side of the business that's capturing a whole market that when I started World Peas years ago, we really weren't buying food online. And so this whole side of the market is new and exciting and competing with traditional retail. And then in the marketing side as well, social media has really catapulted some brands from total obscurity into the mainstream. And a good example is like RX Bar, that was purchased by Kellogg for, a little over $600 million. They started online and really built a following, then went into retail, and Bulletproof and a few others that are real standouts right now had a similar strategy. So I think that kind of the change in that side of the business is important to note. Also, I think there's just this continuing distrust in big food, so the really large CPGs. And the low barriers to entry in the space have created lots of opportunities for small companies vying for this really limited space. I think for a lot of those companies that are in the perishable side of the business or refrigerated, growth can be really slow. And I think a lot of companies will be put out of business because of that. There's just limited shelf space and a lot of small companies vying for that space. But, as long as big food is losing a few percentage points a year in sales to these smaller companies, a few percentage points in a multi-billion-dollar industry in the U.S. is big money. So I think there are opportunities out there because of new channel opportunities and the distrust in the big food companies and excitement around smaller companies, but there's certainly some obstacles to success.
So where do you think the distrust for the big companies comes from? What did the big companies do that loss of credibility?
I think it's evolved over time. I think that people really care about what's in their food. And perhaps over the years, as margins have become important to, especially the larger public food companies, ingredients have suffered. And to that, as we care more about what goes into our bodies and about what ingredients are included and where they come from, those particular ingredients are very important to the consumer. And while for years, Big Food didn't have to really pay attention to that, now it has become very important to the consumer. And I think reading behind the label is important. And Big Food was able to get away with it for a long time. But I think that's changing.
And so if you were to do investments today, what would be your investment thesis? What would you look for in a product before you put money into it?
Well, I'm sure everyone's heard this before, but to me and many others, strong velocity is likely the most important metric in this sector. If a company can illustrate really strong sell-through, even in a small number of stores, it gets me excited. Those are the companies that I've invested in. I also love data. I mean, we're in a time now where there's so much data available. And I really like companies that are good with their data, that are leveraging that data to benefit their sales, and that can present that data weekly or monthly or quarterly to show the real trends in their growth. I think a lot of smaller companies ignore that, and I think it's really important to tell the full picture of a company, because that data is available so much more readily than it was before.
So you've been on both sides of the table as an entrepreneur as well as an investor. For the entrepreneur, they always have challenges in making these things go. What do you think the main challenges are for starting and growing a CPG company for the entrepreneur?
Well, I think it's becoming more and more expensive to launch into retail. And I think the burn rate for some companies, these small companies, is not sustainable. Retailers are being pushed to improve margins, and they're pushing that on to manufacturers. We've seen that recently with Amazon adding additional fees to manufacturers, to every manufacturer in the store, and then further pushing them to promote. And so that expense is really going to limit, I think, the number of manufacturers that can participate in the space, because it's really cutting in to margin dollars for the manufacturers. While online is providing a whole new set of opportunities for CPG and food and beverage, there's a lot of limitations and challenges with freight and shipping. And obviously perishable is very difficult in this space given those same kind of concerns.
So the shift to online, what's that going to do to the type of companies we see coming out? Do you think that's going to favor the ones that do well online, and so we'll have more choice, and those that don't sell well online will just have less choice? Or how's that going to shape out?
I mean, I think it's a necessity now for any new CPG to have an online presence. I know it's hard for the highly perishable items, but for all of the other items, given the exponential growth in people purchasing their food online, it's important that small companies have a solid online strategy. There's just a lot of growth in that channel, and I think it's an easier and cheaper channel to play in for small companies. So I just see continued growth in that space, whether it be through like an Amazon Fresh or retailers that are delivering online, or taking orders online and delivering, or a pure online strategy plays, which in the last few years have actually been really successful.
So on the other side of the table, you're an investor. What are the risks you face when you invest in these startups, or what do you count as a risk when you go into a deal?
I think I've mentioned some of them already, but there is finding the right kind of founder that is willing to absorb some of these real challenges with respect to funding and cash flow issues, because it really, people with inexperience in the space and with inexperience handling those types of risks will spend money perhaps on spotting or unnecessary promotional spend from distributors, and will run out of money quickly. I think the other challenge is there are well-funded startups as well, and so if you have a player in the space that's not well-funded, that's trying to be scrappy, they might be head-to-head with a more well-funded startup, given all the investment activity in this space. So there's certainly some pitfalls, but I think good products with a good team and good velocity will still be strong in the long run.
Well, it seems in CPG there's many, many niches and sectors and subsectors in food, beverage, health, wellness, etc. Where do you think the immediate wins are going to come from, or the best opportunities for investors? What segments or sectors do you think are going to be the best payouts?
Well, I can speak to food and beverage. Food in particular, I think people are looking for more from their food. They want to know where it comes from. They want to know how it's made. They want to know what's in, what ingredients are being used. They also want to know what benefit it provides. People want to know what kind of protein, fiber, even ketones that are included in the things they're eating. So I think this trend of functional, be it in food or beverage, is not going away. And I think it really plays nicely with all the newer diets that you see out there. I think along the same lines of food and beverage, plant-based is really big. So you're seeing a lot of interest and a lot of stronger velocity in the plant-based items. I think it'll be really exciting to see how these trends change the way we eat. And I think that's where there's some really interesting opportunities to invest, because the nation, the U.S. at least, and I think across the world, is changing in terms of our diet and how plant-based our diet is going to be.
The last few minutes we have here, what else should we cover that we haven't?
I think it's a really fun space to invest in. I think certainly given the low barriers to entry, there's a lot of small companies out there looking for investment dollars. But I think those that are going to be successful are ones that can demonstrate strong velocity, that have founders that are willing to take really smart decisions with respect to the money that they have, and that have real passion about their business. And I think that's probably the same across all different types of in the investment community. I think it's across all different types of asset classes. So I think it's an exciting thing to invest in, and I encourage people to do their research and invest in these types of products.
Great. Well, what's the best way for the audience to get back in touch with you?
People are welcome to email me at first name Anish, middle initial N, last name Sheth @gmail.com.
Great. We'll put that in the show notes along with your LinkedIn profile, and appreciate your taking time and hope to have you back for a follow-on soon.
Okay. Thanks a lot, all.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.